Good morning this Monday, the 10th of July. I'm Grady Wolf, a market analyst with Bell Direct. Investor fears of further rate hikes in the US sparked a sell-off in US equities on Friday, despite a slightly favourable jobs data being released. The US Labor Department's June jobs report revealed payrolls increased less than expected by 209,000 for the month, following an addition of 306,000 in May, in a sign the tight labour market in the US is continuing to cool. The US unemployment rate, though, came in at 3.6%, down from 3.7% in May. Despite the favourable jobs data, the three key indices posted losses for the week as investors digested the latest FOMC meeting minutes, with concerns the Fed will begin raising rates again as soon as the end of this month. The Dow Jones fell 1.16% over the week, while the S&P 500 lost almost 2%, and the tech-heavy Nasdaq declined 0.92% from Monday to Friday. Over in Europe, markets edged slightly higher on Friday, following the release of the favourable US jobs data report. Germany's DAX rose almost 0.5%. The French CAC added 0.42%, while in the UK, the FTSE 100 actually fell 0.32%, weighed down by OSB Group, as the British financial services provider tanked 28% after the company said it expects net income to drop by up to £180 million or $230 million as mortgage customers move away from high-rate products. Locally on Friday, the ASX tumbled 1.69% as every sector closed the last trading session of the week in negative territory, with REIT stocks taking the biggest hit as the sector closed 2.6% lower. The ASX sell-off on Friday was sparked by investor concerns of a robust jobs report out of the US, which was released after our local closing bell on Friday and came in quite the opposite to what local investors had been expecting. With the favourable jobs report in mind, the SPI futures are anticipating the local index to open Monday's session on a much brighter note, up 0.36% to start the new trading week on a very positive note. On the commodities front this morning, oil is trading 0.32% lower at $73.57 a barrel. Uranium is down almost 1% at $55.65 a pound. Gold is up 0.15% at $1,927.93 an ounce, and iron ore is down 0.88% at $112.50 a tonne. Taking a look at the economic calendar for today, China's highly anticipated annual inflation rate data for June is out today, with consensus expecting a rise to 0.2% from 0.1% in May, as the economy continues to struggle to rebound on the growth front post the end of lengthy pandemic restrictions easing. Shares trading ex-dividend today include Collins Foods, Red Hill Minerals and Turner's Automotive Group. If you've been thinking about these stocks, it might be worth considering buying in today, as stocks trading ex-dividend generally trade lower on the ex-dividend date. One Aussie dollar is buying 67 US cents, 95.18 Japanese yen, 51.94 British pence, and 1 New Zealand dollar and 8 cents. And now let's dive into some trading ideas for your consideration today. Bell Potter has decreased the price target on Clarity Pharmaceuticals from $1.40 to $1.30 and maintained a speculative buy rating on the healthcare equipment and services company, following the company announcing that it will commence a phase 3 trial of its diagnostic agent in prostate cancer, targeting high-risk prostate cancer patients prior to a prostatectomy. There is currently no marketed MTR products for this indication, hence, according to the Bell Potter analyst, if the trial meets the primary endpoints of sensitivity and specificity, the product will become highly differentiated from its peers. And Trading Central has identified a bearish signal on Wesfarmers, following the formation of a pattern over a period of 110 days, which is roughly the same amount of time the share price may fall from the close of $47.09 to the range of $41.50 to $42.50, according to standard principles of technical analysis. And that's all we have time for this Monday. Have a fabulous day and happy investing.